I'm Robin Amlot of IBS Intelligence. You're listening to the IBS iViews podcast, where we discuss the latest trends in payments and financial technology. Today, we're diving into the world of ISO 20022, specifically the Swift CBPR Plus migration, possibly one of the most significant transformations in cross-border payments. Joining me are two experts in the space, Akhil Rao, Managing Director of Nth Exception, a fintech company specializing in cross-border payments and ISO 20022 solutions, and Biju Suresh Babu, Head of Banking and Financial Services at Fiorano, a provider of middleware, API, and open banking solutions for banks and financial institutions all over the world. Thank you both for joining me today. Let's start by understanding where we are with the CBPR Plus migration. Akhil, can you provide an update on the current stage of this transition?
Thanks, Robin. So from the CBPR Plus Swift journey, we are at a very pivotal point. The migration started back in March 2023, and Swift officially activated the coexisting phase. So when we say coexistence, that is the ISO 20022 and empty messages can be used by all financial institutions on the financial network of Swift. And this phase is set to run until the November of 2025. And that is when ISO 20022 will completely replace empty messages for the cross-border payment messages. Now, most of the financial institutions are working on their migration plans, but the readiness completely varies. Some banks are in advanced stages where they have adopted ISO 20022 for specific use cases, while the focus has been on the payment messages. Others are still in early phases, mostly assessing technology upgrades and the compliance needs. At the same time, the pressure itself is building because the requirement of structured data is not just a technical requirement, it's increasingly getting tied into multiple regulatory mandates.
This sounds though it's going to get messy. Biju, what trends are you seeing in terms of readiness and adoption?
Robin, so to start with, thank you for having us. It's always great to catch up. So in terms of readiness, it's a mixed landscape, right? As can be expected, as normal with these kind of things, the larger banks globally are leading the charge. And in many cases, they're leveraging a combination of middleware-based solutions to offer coexistence with current platforms or core banking upgrades or payment hub adoptions. And quite often, the smaller banks are quite often facing challenges. There are budget constraints. There's a lack or a bit of a shortage of technical and functional expertise, because ISO brings a whole new language to the table, right? Every bank in the world has a team that understands legacy MT, but MX is a completely different ballgame. How many understand that is a problem. And it's also a bit of a multi-layered issue, right? Because like Akhil mentioned earlier, ISO 20022 has been live since March 2023. So in a sense, every bank in the world is compliant. But what does compliance look like for November 2025 and November 2026 when you compare to what we had to do for March 2023? Because those requirements are very, very different. And there are more and more mandates coming in that are going to have severe implications on the ability of banks to affect payments. So it's a mixed bag.
Let's dive into why structured data is so important. Akhil, how does ISO 20022 structured data actually transform the payments ecosystem?
Structured data becomes the backbone of ISO 20022, and this is not just applicable to the Swift CBPR Plus, but also the high-value payment systems and also the innovations that are coming down the line, something in terms of central bank digital currencies, and the technology around it. Even if we look at distributed ledger, most of the technologies are seeking structured data. And in fact, the current state is around, the discussions around AI. AI itself is dependent on structured data, right? And we will be looking at a lot of financial institutions developing some or other sort of LLMs that will be put to use over the period of time, over the next couple of years. And these will be based on the ISO 20022 structured data, because the data itself is very accurate, comprehensive, and machine readable. Now, particularly, we will see that there will be operational efficiencies coming out of structured data. Then the regulatory compliances, such as anti-money laundering and KYC, KYB requirements will be improvised. At the same time, there will be enhanced transparency in the data that is moving across the cross-border payments network. From a strategic perspective, it's not just about compliance at this stage. It's about banks should be looking at how they can leverage ISO 20022 structured data in future-proofing their payment systems for innovation.
Let me come back to you, Biju. What are the mandates driving this migration?
So I'd say roughly there's two broad categories. So on the one hand, like Akhil clearly mentioned, there are tremendous benefits from ISO data around processes, and in the future helping things like DLT and AI, which all need structured data. There's no question. But bring it back to where we are today, from a mandate standpoint, this is not optional, right? Migration is absolutely a part of any cross-border payment requirement. Mandates are by SWIFT. A lot of those mandates are being driven, SWIFT for cross-border payments, and there are multiple regional mandates also, right? And whether you look at the cross-border one by SWIFT or the regional Eurozone one, these mandates are largely being driven by things like the BIS G20 mandates or the FATF's payment transparency guidelines, all of which are around improving transparency in global payments to reduce things like money laundering and terrorist financing. And increasingly, apart from mandates we're seeing from SWIFT, we are seeing regulators begin to start enforcing compliance on the use of structured data, because that helps massively drive enforcement of elements around things like AML, sanctions management, etc. Right? So the key takeaway is, one, yes, there is a set of mandates to comply with, which are being enforced globally across cross-border and domestic networks. But B, there's tremendous benefits of implementing ISO 20022, but it's not really an option. It has to be done. For the first time in the world, the financial services space gets access to big data through ISO 20022 messages in a way that has been accessible to other domains before us. So we do need to look at this in a very strategic manner, like Akhil also mentioned just now.
All right, let's see some examples if we can. Akhil, how are financial institutions doing? Have any of them successfully navigated this migration?
Absolutely, Robin. For example, we have seen a couple of tier one banks that have implemented ISO 20022, and that is for specific corridors obviously on the traffic and the volumes that they receive from those corridors. And the focus has again been on the payment messages, that is the fax 008, 009 messages in those specific corridors. And this has resulted in faster payments, and of course, the customer satisfaction has also improvised. Now, they started investing in technologies like middleware solutions and focusing heavily on the data quality of these payment messages in those corridors.
All right, those are the people who've succeeded or are succeeding. What about everybody else? Biju, what practical advice would you give to institutions that are starting their journey?
That's a good one, Robin. So I think a few points. One is there are deadlines, right? So we have to meet deadlines. So you need a quick fix, because we know very clearly from all the data coming in that there's a lot of banks who are nowhere close to meeting regulatory requirements. But at the same time, ISO delivers long-term value. So, and ISO is not limited to payments. So while right now, everything we have discussed are around deadlines in the payments world, we know over the coming years that other domains, trade finance, securities, are all going to be migrated to ISO 20022. So if you're a financial institution, please do not think of ISO as a tactical fix just in payments today, because you need to think about other domains going forward. Also, we're seeing a lot of banks look at ISO as a scheme-specific problem. So they'll probably look at a regional domestic scheme as one issue versus CBPR plus as another. In reality, what's going to happen is ISO format, data, and messages are going to spread across the enterprise, right? It is a multi-domain, multi-scheme, multi-system problem. It's very, very important that financial institutions take a holistic view of how to address this and not break this down into small individual project silos constrained to a specific need of today. So I think taking one step back and not thinking of this as a compliance only project or a single scheme issue or a single domain issue is very, very important. Remember, the other thing is that there's a lot to benefit from ISO 222. The data economy is here, right? And ISO delivers that to banks for the first time ever. And we've been running simple experiments, for example, of overlaying ISO data on top of open banking data. The resultant data set is tremendously powerful. But that again requires banks to take a step back and look at ISO as a strategic enabler for the future, more than just how am I going to meet requirements for March 23/November 25 or November 2026.
Let's wrap it up now. What advice would you both give to financial institutions preparing for CBPR Plus? Akhil, if I can ask you that question first.
I'll say start now and see this as an opportunity for long-term growth. ISO 20022 isn't just a mandate, it's a chance to future-proof your payments infrastructure.
And Biju, your view?
Well, in addition to starting now, I'd say when you look at your solution set or how you're going to fix the problem, look at products and solutions that can give you the benefit of fast compliance, along with the option to monetize ISO data and provide you that capability across multiple domains and multiple schemes, right? Otherwise, you're going to end up buying 10 different product sets to meet small parts of a much larger ISO problem. So one, start quickly, and B, look at solutions that can give you a holistic capability across domains, schemes, and message sets.
And you've been listening to the IBS iViews podcast. Stay connected with us for more insights on payment and technology. My thanks to Akhil Rao, Managing Director of Nth Exception, and Biju Suresh Babu, Head of Banking and Financial Services at Fiorano. Thank you both for your time, gentlemen.